Welcome. This is Power Trading Radio Live, fueled by Online Trading Academy. For more information, visit powertradingradio.com. Now, here's your host, Merlin Rothko.
Hello, everybody. Welcome to Power Trading Radio. Merlin Rothko with you for your Thursday afternoon edition. A little bit different show today. I was all excited. We were going to have Larry Jacobs on the program today talking about NVIDIA, which of course is a hot topic du jour, and Larry got pulled into some meetings and all kinds of other stuff because it's just chaos around here. We always got some fun stuff going on. And then Mark Greco, I got to throw him under the bus. He bails on me today. Again, more development stuff with the platform. So he says, I can't come on today, but I'm going to come on the next couple weeks. So we'll have Mark Greco on here in the near future. Really excited. For those of you who are all my Trading Academy graduates, part of the Mastermind community, there's the Mastermind grid levels, and it's one of my favorite things because it gives you ideas. You don't necessarily have to use those levels, but as an educational tool, it's nice to go back and look and see, all right, they're saying that there's a zone at this specific point. It gives you your, kind of defines the zone there. And then, you take it, you go home, you look at your chart, say, yeah, it lines up with mine or not, and maybe how do I get to those zones? Well, now what we're going to do is implement that right into the Click platform. So if you click on the Mastermind grid, all of a sudden, boom, it populates automatically on your charts with the lines and everything, which is a huge undertaking. Pretty excited about that. That is going to be rolled out soon. It's in the works. It's on the list. There's so many things on this list for Click we want to get done. Basically, it's like get the basics done, make it a nice, stable, robust platform, and then start layering on all these proprietary tools that you can only get with Click. So we'll have Mark Greco on to talk about that in the near future. Again, I'm going to be alone today on set. So what that means is I'm here to answer your listener questions. If you have some, feel free to send them on in at powertradingradio.com. Click the little button there that says Power Blast, or you can join us in our discussions on YouTube. We've got Online Trading Academy's YouTube page as well as Power Trading Radio's YouTube page going on right now. So say hello to everybody, send in your questions, and hopefully we will answer them on today's show. All right, for those of you who are equity bulls, today started off a little bit rough, right? Started off with a pretty significant sell-off, and then all of a sudden, resilience has been the key word we've been saying for the last few weeks, actually months now. It just keeps going, shrugging off any kind of bad news out there and moving towards higher highs. So we will start things off. What do you got for me to start with, TJ? The ZN. Yes, the 10-year U.S. Treasury futures note. That's what we'll talk about first. As you can see here, you broke out of that little pennant formation we talked about yesterday, and normally, so according to Bukowski, when you have a pennant formation, and a pennant formation really is this kind of shape here, this compression, but it should be after a bigger run-up, more of a sharp run-up, but we'll let that one slide. Normally, the breakout will be in the direction of the previous trend, which was obviously up. So right now, that's looking pretty good for those of you who are long on that U.S. 10-year Treasury note. But that means that the yields are falling. That was your worst performer out there today. Yields were down 2.87% today, just barely above that 150 mark. It's at 152.50 right now. So all in all, a pretty good day for the 10-year futures note, but bad for yields. And that's what we're seeing across the board. I saw today even the Spanish 10-year bond auction dropped from 0.35 to 0.24. So they're dropping ever closer to zero. And Germany yesterday or day before also had an ugly showing with regards to the yield on the 10-year. Anyway, that's number 7. Let's move our way up to number 6. Get a little bit of damage, I'm sure, to the NQ today from Tesla. Wasn't the best performer out there today, but look at the candle here. Look how wide that range is. Everything was pretty wide range, actually engulfed at one point all of yesterday's trading activity. But what we had was a nice little bounce near the end. Now, you'll notice that it still was down on the day. The NASDAQ was certainly the worst performer out there. On the day, it was down 0.67% for the composite. That brought it to 9,705 for the session, making it your number 6 performer on the day. Not the worst, but pretty darn close. All right, moving on to the S&P 500. TJ will bring that one chart up for us. And those of you who saw the title of today's show, yeah, TJ thinks that today's Wednesday because, it's a short week. It's not hump day. Hump day is Wednesday. Today's Thursday, TJ. Yes, we got to love TJ out there. All right, let's see. So here's S&P 500. Looked almost identical to what you have with the NASDAQ. You see this candle. It still is, for all that would like to know, this is still a bearish engulfing formation. How do we know? Well, look, one of the ways you measure an engulfing formation, as we talked about candlesticks the other day with Wayne Citron, is you'll notice that I'm taking the high of today's candle and I'm taking the low of today's candle, right? There's 2 ways to measure an engulfing formation. One of those is that this candle here, this green candle that TJ is circling his mouse over, fits within the entire range. That's one way to perceive an engulfing formation. The other one is that the real body or the entire candle fits within the range of today's candle. if that makes sense. So I'm having TJ move these lines around. So now we've tightened it up a little bit, and you see I've just put lines above and below this red candle for today. And you notice that yesterday's trading activity fit almost entirely within it. That is a bearish engulfing formation. It doesn't mean we're going to implode tomorrow, but it's definitely a negative sign. Some might call that an outside day as well. All right, that was what was S&P? Number 5, down 0.38%, so certainly nowhere near as bad as the NASDAQ, but still bad nonetheless. Finishing at 3,373, and it's actually down another 6 points in the after-hours session, so starting to slowly slip to the south side. We'll see if we dip down to those lows on S&P in the wee hours of the morning, which lows today on the SPX, or it's not SPX, on the ES futures contract was down at, 33.39 and a quarter. We'll see if we get down there. I don't think we will, but you never know how it goes in the after-hour session. All right, we're nowhere near the podium. Number 4 brings us to Bitcoin. Really, Bitcoin back in these numbers are flipping all over the place. Refresh this one, TJ. It says down 0.32, so I guess that's still in line. You'll see some nice volatility going on out there. Some of you have asked, can you trade this like stocks? Yes, you can. Many feel that you cannot. You absolutely can trade this like a trading platform. If you look at Coinbase Pro or some of the other ones, it has pretty much level 2 where you see the buyers and sellers. You can make a bid, you can make an offer, market limit orders, etc. So yes, you can trade this pretty much like you would a normal security, but there's a lot more risk, as you can see those fluctuations are very, very wild. 9,616 is where it closed at today. Last 24 hours, that's a decline of 0.3289%. All right, that was number 4. Podium time it is. Russell 2000 really showing great resilience today. Russell is really impressive, actually. You look at the end of the day results here for the Russell, it looks way better than every other market index that we have. Why? Because it closed right near the high of its range, even though it was down for quite some time. It was really down there and then ripped back up. Positive sign, very, very positive out there for the Russell 2000, which finished up 0.21%. A stark contrast to our other indexes like the S&P and the NASDAQ. Final number for the Russell was 1,696. Right now we are down 3 points in our after-hours session, but that's your Russell taking the podium in 3rd place. All right, gold, silver medalist again. One of these days gold will actually be golden and take the top spot. Now, here's the interesting thing. We talked about the ascending triangle, which I didn't really feel this is a strong example of an ascending triangle. Had this middle point here, zoom in TJ, had this middle day, let's say February 3rd, been up to this neckline, or this baseline they'll call it for an ascending triangle, then I would have felt more confident in it. Bottom line is, we talked about, it's making higher lows, and it was coming up to that same area of, that same pivot point there at the top at about 16.14. We broke above it. We're holding above it. So all in all, this is actually rather positive for the gold futures right now. Again, I still think, as many others, including Brendan and our YouTube channels, think that it's going to go all the way up to 1,700 this year. Maybe, I think Brendan's probably more optimistic than I am. I think 1,700 is a realistic number for this year, especially should we start to see some uncertainty in the tail end of the year. Gold on the day up 0.65%, $1,622 per ounce, and it's already up in your after-hour session by another $2. I want my $2. All right, as you guys can already hear, my voice is giving out in our opening segment all by myself. This is going to be fun. And we haven't even gotten to number 1. TJ is going to bring up crude oil, which continues its torrid pace to the upside. Look at crude oil go. All right, crude oil. This has been the topic du jour. It's been the one we've been following and actually pretty much calling the days for crude oil here. It's been pretty clear-cut where it's headed and what it's doing. Now becomes a minor inflection point, a minor point for crude oil. We go, okay, now what? We broke above 2 significant areas that gave us information about the health of crude oil, right? We broke above this high that we saw on the 6th of February. That was a sign that this double bottom was in fact in place and now potentially some upside movement. We knew that there was a supply level on going back to the 29th of January, which could also be a challenge. Now today we did break above it, but we've ended the day with a shooting star formation. Shooting star formation is a rather negative one. It would not be a shocker to see a little bit of a pullback here down towards that 52.30 mark, maybe retest, and then potentially rally back up. So other than that, you notice there's not a lot here to slow this trajectory of crude oil down. Today you had crude oil inventory numbers come out. The previous week was 7.5 million barrels. They were expecting it to be 3.3 million barrels. We came out at 0.4. So they were off by 7.1 million barrels on expectations. That's 7.1 million barrels fewer than expected, which is part of the reason we saw this rally up today in crude oil, which put crude oil in your number one spot, up 0.9%, all the way up to $53.77, which is pretty much where it's at right now. And that is your top 7 markets, my friends. Hopefully one of those put some gold or some crude oil in your pocket and helped out your portfolio today. All right. I was going to take a quick commercial break, but you know what? I'm going to end it with Bizarro. Let's just go to Bizarro world out there today. Today is one of those days where you just shake your head and you go, what in the God's great green earth is going on right now? If you look at some of these market performers, obviously there are names that we all resonate with. You go Apple and Google and Alphabet and Amazon and Netflix, and these are the ones that are soaring and just doing so well. I would love to give away a prize. If I could give away a prize, I would challenge you guys without going out to any news source right now, looking at the top 10 list. And let's just do it for fun, guys. I don't do too many interactive polls, so do not go out to a financial website to find the answer to this. Type in what you think are the top 2 gainers in our market today for the stocks. I want to know from you guys the top 2 stock gainers today in our market. Don't cheat, just give an idea what you thought it might be. I found this to be rather hilarious. One of them I think is an absolute joke. I've been saying it for a long time, and apparently I'm the joke because it is just soaring out there. And the other one, it's not a company that you expect to have a $76 move to the upside. $76. It's not Berkshire Hathaway, by the way, because that $76 would be nothing. But what do you guys think it is? Type it in the chat out there. Let me know. I'm curious to see what you guys might think is the big movers out there. So Gayer, Vernon, Sabrina on Online Trading Academy's YouTube page. And, of course, Patrick. Welcome back, my friend. Patrick, Brendan. Who else we got here? Jorge, Trent, Steve. What do you guys think? Big Eb? Who is the biggest gainer out there today in the stock market? Hilarious. Apparently you guys don't know. I see it's crickets in the chat out there today. All right. I will tell you, the number one performer, which when this company came out years ago, I thought, this is a joke. Could this possibly do so well? The irony is, it's almost, some would argue that the post office is very akin to the DMV, that the service is terrible. I actually don't have a problem with the post office whatsoever, but it usually gets a bad rap. The biggest performer today, let's bring it up, TJ. Bring up, it's STMP. Stamps.com. Can you believe that? Stamps.com. Here we go. I love it because you guys, I see GE, Tesla, right? Lululemon, Amazon. These are all logical guesses. Dropbox, okay, that's not a bad one. Beyond Meat, why not, right? It's been a crazy flyer. Check out Stamps.com. Look at this. Bring this chart up, TJ. This is just ridiculous. Stamps, of all things, stamps. Really? Who mails anything anymore? I guess, you're Amazon, you got to ship stuff, but just crazy move up for Stamps.com today. That was a 65% move up in Stamps.com. What on earth is going on here, people? That was a $62 move per share to the north side. An unbelievable move. But that was your number one. Number 2 is equally as jaw-dropping because, you think about a mature business, you think about something that, is the potential really there for a huge move up? Domino's Pizza. What, really? Domino's Pizza? Of all things, I don't know. I feel like, did someone slip me some narcotics this morning? I feel like I'm looking at the wrong charts. Domino's Pizza was up 25% today, $76 per share on an earnings beat. I just thought I would share those with you because normally when we think about these major market movers, and these are mature, Domino's is a mature company. You would think that the probability of this company having a 25% pop is just bizarre. Well, it didn't. It actually looked pretty good out there today. Those are your 2. I don't know. Thanks for allowing me to go on my little crazier rant out there. And then your activity. Like it. All right, that will do it for opening segment. I am going to take a quick break and sift through the comments over here and see what we've got from the listeners. Of course, as you guys can see, I'm all alone in studio today, so I will talk until my voice gives out and I sound like the girl from The Expanse. I don't know if you've ever watched the TV show The Expanse. There's a girl in The Expanse and she talks like this. I could be that way by the end of the show if I keep talking with this velocity. So send in your questions, send them in at powertradingradio.com or go to our YouTube channels, broadcasting under Online Trading Academy as well as Power Trading Radio's YouTube channel. We'll be right back after a short break.
What if you knew the income strategies professional investors used? The strategies designed to generate active income from the financial markets. After all, no one's going to care more about your money than you.
I learned that I can be in control of my 401k.
I used to work for money, now I have my money working for me.
With the right training and guidance, you can learn the skills to become a more confident investor and make your money work harder for you. Want to find out what's possible for you? You can, as long as you're willing to take the first step and call OTA today.
Call for your free tickets right now, and you'll also receive a free Professional Insiders kit loaded with lessons from some of our top instructors on topics like enhancing your retirement strategy, capital preservation, and income generation. The Professionals Insider Kit makes it so you can get started right now.
Call 888-304-8723 or visit us online at tradingacademy.com and schedule your free class today.
Click is something I wish I had when I started because it facilitates the learning process a lot quicker.
This is not about taking many trades, it's about taking the right trade.
It helps me save myself from myself. It's just a revolutionary educational tool. It propels you through the learning curve.
The biggest shock for me is the level of innovation that happens within the company, and it's continuing.
It's just perfect in this new century of trading.
Everyone's on the same side, and I think that's what I love about it more than anything else. Helping each other, supporting each other, all with the same objective. Again, wonderful.
There's no mountain high enough that the leaders in this organization won't climb for their students. They'll just never give up.
It can only help. It can only make one a better trader.
Gives you one of the most valuable things we all have, and that's time.
Welcome back to Power Trading Radio Live with your host, Merlin Rothfeld, and today's special guest.
Hello, everyone. Welcome back to Power Trading Radio. It is your Thursday edition, one day closer to the weekend. We started off our show going over our market indexes, our top 7, and then kind of digressed a little bit into just the shockers of the day. It's great always getting the feedback from you guys. You're awesome. I love the fact people are going, Domino's Pizza isn't even that good. It'll do in a pinch, right? When you're having that party and you need that $5 pizza delivered. Yeah, it will do. But I will tell you, and somebody even said here, Round Table is better. Come on, who says big app? Round Table is better? I lived in Italy for almost 7 years, and what was so bizarre, what's interesting is the day I got back from Italy, a bunch of my friends in Northern California decided to take me to a pizzeria. I was like, do you guys know where I have been for the last 7 years? I've been in the land of the best pizza in the world. Until you have had a Napolitano pizza, una buona pizza di Napoli, none of these pizzas compare. There actually is a couple good places here in Southern California, but I really don't even like eating pizza here anymore because it's just not good when you compare it to a good Italian pizza. I know I'm offending some of you full-blooded Americans out there. Oh, you can't even mess with our pizza. All right, let's see. What do we got? Brendan, you were asking a question about the coronavirus and the Fed. Let's see if I can get that one. So the Fed warned yesterday that suspected earnings shortfalls due to COVID-19 or coronavirus need to be announced sooner rather than later or face possible shareholder issues. Thoughts from others? Well, I think it is being overlooked. It's a question of how big is that impact. So obviously trade's going to be impacted significantly. I do think it will be an impact on earnings, but for some reason, and again, this is the hard part about trading, is I'll just direct it towards myself. I don't want to sway any opinions, but my opinion is that we are going to see significant earnings issues with those that are dealing with China extensively, especially those that are getting stuff manufactured in that specific region where they're shutting it down. Obviously, that's going to have an impact. Then I look at other factors out there which I think could be a problem for our market. So I have a list of things which I look at and I go, this could be very problematic and it should pull our markets down. But then you look at a chart that looks like this, and I'll, TJ, bring up the daily here of the S&P 500, or go to the NASDAQ's even better, where it's climbing this wall of worry, and it just doesn't care at all about China. It doesn't care about a trade war. It doesn't care about attacks on Iran and nuclear weapons. It does not care about border walls. It does not care about earnings. It's just going up. Now, it's difficult to hold on to those opinions or biases because I agree with you, Brendan. I do think that it should be disclosed. I think the media is telling us that it's going to be an issue, and I actually do believe it will be. the extent of which is not known, because I think the information coming out of China is not full transparency, and I think the information that we're getting from our media is probably blown out of proportion, so it's probably somewhere in the middle there. That's my take on it, but even if I have this massive negative bias, if I were to hold that, it'd be costing a ton of money. It has cost me a lot of money this year already, actually, from some short positions that I got hit on. When that big pop up in NASDAQ, that one ripped me. So yeah, even though I feel it's going to be an issue, I think maybe we visit that discussion we had yesterday with Wayne Citron and talk about with Steve Moses and talk about deep out of the money options, and look at just a ridiculous black market or black swan event. I think that's probably what's going to happen, because it feels like we're on zombie mode right now. We're on autopilot and we're just going and going and going and going. The little comment from the Fed, or one of the Fed, was a Fed vice president or chair, basically saying that the markets are getting a little bit too aggressive, expecting a rate cut at the end of the year. Well, yeah, the market is pricing that in. So these are factors that are fueling the market up, and I just look at there's too many factors that will end up pushing it down. Here's another interesting one that I haven't done a lot of research on, but I'm curious to see what you guys might think about this. There's the concept of peak oil, right? What peak oil is basically saying there's only enough oil in the ground. As soon as we end up extracting all that oil, it's done, and there won't be any more oil in there. Okay, I'm not a geologist, so I can't make those statements. I haven't studied it, but in theory, it sounds great. How about this one? How about peak gains? At a certain point, isn't all the money that you have in your account? So let's just take everybody here that's watching the show. If you felt overly bullish and you kept putting more and more and more and more money into the markets, then you don't have any money to put in. You have peaked out on your capital that you could contribute to this market rally. At what point does that happen for us? Because I'm looking at this market rally and I'm just dumbfounded that it's gone on for as long as it has. I mean, we're on 11 years now, which time isn't the issue. It's the velocity, the lack of pullbacks, and the continued uptrend. Of course, we know the Fed is a part of it, but at what point do we say there's not enough capital to continue to push this market up? Do you believe in peak markets, or is there such a thing as peak markets? I don't know. Throwing a hypothetical out there. All right, let me go to a listener question here. Sarah, who sent a whole bunch of questions last week about correlation, which was great, Sarah. I appreciate that. She says, thanks for all the helpful tips on correlations. What are your thoughts on using market maps at FinViz? Does that accomplish the same thing? I had TJ brought that one up earlier. Look, there's a lot of free resources. We are not affiliated with any of these sites, so use them at your own risk. There are some great tools. I'm a fan of FinViz. I think they offer some pretty nice features. The map of the markets that she's talking about, and TJ, bring it up full screen. Let's go to maps over here. You go to finviz.com, you go to maps, and there's a wide variety of them. So for those who haven't seen anything like this, it's pretty cool. It gives you a good breakdown of the S&P 500. So what I'm looking at here is 500 different companies, and you can see their relative market share as well. So who are the biggest companies out there? Well, clearly Apple in the consumer electronics space, Amazon in your catalog and mail order home. Microsoft is the big dog by a long shot in business software and services. Google's in internet with Facebook. So you get a sense as to who's big with different in different sectors. So if you're looking for opportunities within a specific sector, that's how you could do it. It's nice. What's great about it is you can actually, this is one day performance, but let's say I wanted to go and see how they've done for the past year. Well, very quickly you can see why these markets have been soaring, because Apple and Microsoft are members of most of the major market indexes. Same with Amazon and Google, and those are up. Apple's up 86%, Microsoft 72%. So that's helping our market pull up. Not a lot of red stuff out there. Boeing, of course, over here down 20% in the last year. But this is one way to do it. I also like it from another perspective, which is looking at the world. If you want exposure, we had talked about companies in China, right? Well, you'll notice up here, these are all Chinese companies. So if you're looking for potential shorting opportunities, because obviously if these companies in this list right here are doing a lot of business with the U.S., there will be some issues, especially if it's shipping goods and services, et cetera. So I think that it's useful, but I don't believe that it's as good as doing the perf charts that we had last week. I think perf charts are probably the best because you can see performance with the assets all lined up together. This is kind of showing how a sector is broken down and how it's performing. You can also go into exchange-traded funds. For those of you who want to know more about ETFs, we have a whole bunch on ETFs at otaacademy.com. But this is a great way to find out exposure in different markets. So let's say, for example, you thought that China was going to be doing rather poorly because of all of the issues going on. Of course, you see right here, you see there's a whole box of just China ETFs. These represent different segments within China. Some are overall markets like FXI, but you have other ones here, which is the Harvest Asian I don't even know what these ones do, guys. Honestly, there's so many different ones in there. But just to give you an idea of how to use these tools. Now, to the initial question that Sarah posed, which is, does it help you accomplish the same thing? No, it does not. But it's nice to give you a window into the markets, not just domestically with the S&P 500, but also with global marketplaces. Because, there's a lot of things that we consume here that are made in China, that are made in Taiwan, that are made in Vietnam or Europe. Well, if we feel that that market is going to be doing poorly and those companies are going to be doing poorly, I can single out those and maybe find those as shorting opportunities, or vice versa. Let's say, for example, we feel that Vietnam is going to just be the next big booming economy. Well, I can go back to our world map here, and let's see if I can find Vietnam on here. There's Taiwan, Singapore. Let's say it's South Korea, just for the ease of argument for today. I can click over on the South Korea part here, and you can see right away I've got a list of probably 10 or 12 different companies, which aren't the only ones, but those are some of the larger ones that are trading on U.S. exchanges. So kind of a nice way for you to break down markets. If you have, we've got our great designer here that works for us. His name is Simon. Well, he's probably going to go long every company from France because he's from France out there. He's going to go long total, and I don't know the other ones out there. So there you go, Sarah. That's my 2 cents on it. I actually really do like this as a resource. I think it's a great way to view the markets, understand how things are grouped. But as far as showing the relationships between one instrument versus another from a performance perspective, those performance charts are the way to go. We're actually, it's on the list to be included in Click in the next revision so that we can do the exact same thing with Click, which is overlap 5, 10 different things and see which one, based off a specific axis point, shows the best performance over time. Okay, man, that was a long rant, and all of a sudden I look at the clock and it's time for another commercial break. So let's take a quick break. This one's a short one. When we come back, I will go to some more listener questions. I've got a great question from Tom about the dollar index, which has been just unbelievable. And again, it poses a huge disconnect for me in our markets right now. I don't have the answer for you guys, but something has to give. We'll look at that when we come back after a quick break. If you have any questions, send them on in at powertradingradio.com. Click the Power Blast button or go to our YouTube channels. Join the discussion with everybody out there. Say hello, send in questions. We'll be right back.
Learning this way is fine when the stakes are low. But when the stakes are high, you need to rely on skill, not just knowledge. At Online Trading Academy, you build your skill one step at a time. We teach our students to trade and invest with a strategy, not a hunch. You learn our methodology, then practice it. You get to make mistakes and ask questions, and watch instructors make live trades. Develop your skill the right way.
Meet Mac. As a trader, he liked the signals that came from technical analysis tools, but they didn't help him find the best trades consistently, so he searched for a new approach. Mac attended Online Trading Academy's free class and discovered their core strategy, a trading methodology that spots when big banks are likely buying and selling, so everyday investors can too. Mac carved out a path to trade and invest with confidence, and so can you.
Call 888-304-8723 or visit us online at tradingacademy.com and schedule your free class today. You're listening to Power Trading Radio live. Watch the show live or on the archive at powertradingradio.com and YouTube, or download the podcast from iTunes or wherever fine podcasts are downloaded.
Hello, everybody. Welcome back to Power Trading Radio. Merlin Rothwell with you for your Thursday edition. PBJ says, what day did you talk about correlations? Oh, PBJ. I'm not sure. It was last week. I know it was last week, but honestly, I couldn't tell you which day. But I know it was one of last week's shows out there. I do so many of these things, sometimes I just forget what I talk about. The beauty of doing this show for a decade, I can't say a decade yet. In April 5th, I believe, was the first show we did 10 years ago. So I'm pretty excited about that. We're reaching that milestone. I was a young, handsome man. Now I'm just an old, gray, bitter guy. Let's see. Question came in from Fink. He says, have you noticed how the ES and the NASDAQ have dropped into a 4-hour area that the Russell hit earlier this week? Yes and no. I think what you're talking about is this one here. So TJ will bring up some charts for us. The Russell seems to have just hit this level a few times, right? You've come all the way down towards this, let's call it 1672 mark. We've bounced off that 1, 2, 3 times already with the Russell. Now, if you look at the S&P, it's a bit different picture. We didn't just come down to those levels. We blew right through them. So to me, there's a bigger weakness that's showing up with the S&P today. When you look at the NASDAQ, it's a different picture altogether, right at the same point. Right, so the Russell and the NASDAQ, I would say, have some similarities. The S&P showed the biggest weakness out of those two. So, yeah, I did notice that. Gayer says, Merlin, you've asked me a few times, and I'm glad you keep reminding me, Gayer, because my brain drifts, and sometimes I don't get to your questions. I apologize. What is your opinion on what is the preferred asset to measure growth against a Forex account? What's the percentage to beat for Forex? It's a little different. I don't actually have a number for Forex. Like, what would you benchmark it against? The dollar index? Unfortunately, I don't have the dollar index statistics going back as long as I do the S&P. So for me, just as overall, regardless of what asset class that I'm trading, I'm trying to beat the market, period, right? And when you say beat the market, you have to say, well, what is the market? For me, and most of my colleagues and most of the traders I know, it's not the Dow Jones Industrial Average. That's a joke. That's our media spread index that basically they say this is the market. It's not. It's 30 stocks. Not a great representation of the market. The S&P 500 is 503 stocks. Depends on the day and how they drop them out or split things. But it's a better representation of the overall market. Of course, we could use the Wilshire 5000, which is supposed to be every stock. That's a little too broad. So I go with the S&P 500 because I have historical data going back decades. So if you look back, numbers will vary depending on where the starting point is. It's between 8 and 10%. So let's meet at the middle point and say 9%. So whether you're a long-term proactive investor or you're even a shorter-term income trader, your goals at the end of the year should be to have your account grow by that percentage or more. Now, I say that loosely because what happens if the market's up 80% in a year and you're like, hey, got my 9? Well, then you underperform the market. So obviously the goal is to beat whatever the S&P throws at you. That said, can you have a down year and still beat the S&P 500? Sure. We've had years where the S&P has been down 20 or 30%. Let's say it's down 30% and you only lost 15%. While you lost, you're still doing a lot better than the average investor out there who lost that whole bunch plus commissions and all that other stuff. So I look at all the assets, whether I'm trading Forex, options, futures, equities, ETFs, mutual funds. I'm using that. I use 10, just 10% as an easy number benchmark. But that's really what I'm doing, Gayer. I don't have a dollar index I'm looking for Forex. And I don't think that you should expect that your Forex return should be 5 times that because of the leverage that you get. They're just riskier if you're using that kind of leverage out there. So that's my answer to that one. Hopefully that answered it for you. Don says, Merlin, should we be looking at a major pullback on both stamps and dominoes? My gut says yes, but I wouldn't touch it. It's too risky. It's too risky, right? If your job is to grow your account and to do this successfully for the remainder of your lifetime, you can't be taking big chances like that. Going short dominoes right now or going short stamps.com just because you feel it has to go down, it doesn't. It does not have to go down. All of a sudden, you can see it gap up. I actually had a friend years ago who lost hundreds of thousands of dollars by shorting a stock that gapped up. It gapped up. He shorted a bunch of shares. The next day, it gapped up again. He shorted more, gapped up again, blew his account. Done. All money gone. That's not good, right? You don't want to do that. There is an old phrase that we've used in this program many, many times. I'm sure some of you live by it, which is the markets can remain irrational longer than you can remain solvent. One of my worst losses ever, I was talking with one of my colleagues about this today, my worst loss ever. Oh, let's share. Why don't we just rub Merlin's nose in his worst loss ever? Bring up Best Buy. Oh, yes, Best Buy. I think it's a garbage company. I think it's just basically the front end for Amazon. You want to go hold and touch and see electronics, you go to Best Buy first, and then you go to Amazon and you buy them cheaper. So let's go to BBY. I had been buying puts on Best Buy. Let's go way back here. You'll see right away. You'll know exactly what happened. I was shorting Best Buy with puts, this rally up. And I made a mistake of buying December. I ended up having like 6 figures short, almost $100,000 worth of put options for Best Buy short. And as you can see, it kept going against me. I was adamant that they were going to go down. I was an idiot. I was stupid for holding my opinion on this one and ultimately ended up losing all of it as those options expire worthless. What's crazy is what happened 2 weeks after my options expired worthless, it dropped 50%, which would have put those options to close to $1 million worth of profit. Markets can remain irrational longer than you can remain solvent. In this case, I became insolvent right before it did what I thought it was going to do. So, you can't have that opinion. You can't look at something like the DPZ right now and say it's got to go down. Let's look at STMP. You can't look at this and go, man, it's got to come down. That's just stupid. They're stamps. Well, look at some of those moves in the past. This is a weekly time frame. You can see that this is a dangerous beast. Like, I wouldn't want to touch this bad boy. So no, I would say stay away from it. Stay away from feeling like you have to go short this security. Let's see, what other questions we have? I'm going to check on the Power Trading Radio YouTube channel. Hello, Power Trading Radio YouTube channel. How's everybody doing? Hope you're all doing good. Okay, let me go to this listener question. This one's kind of vague. But it's nice to have a reference point to start out with. Actually, no, I'm sorry. I was going to do the dollar index question. So the Dixie. The Dixie's been an interesting one. This is one of the things that's puzzling me right now with our equity markets. And I'll tell you that there's a problem I have with what's happening right now. You have gold just ripping to highs. Look at the dollar index. This is the dollar versus a basket of currencies. Obviously, most of it's the euro. You usually don't see that aggressive of a move. Not only did we rip up into this area of supply, but we knifed through that thing like a hot knife through butter. I mean, it was incredible how quickly we went through that peak that goes all the way back to October 1st. We ripped through that thing so easily today. It makes you wonder what's going on. Last time we saw that aggressive of a rally was back in 2018 in April, when it just went almost parabolic and continued for quite some time. So we're seeing the dollar gain significant strength against these currencies. Normally, when that happens, our equity markets look the exact opposite. They sell off and go down. Same thing here. When you have that real big dollar index spike, you would usually expect to see something like gold going down. In this case, you're seeing it actually rally up. So something is broken. Something is disconnected at this point here, and I'm very, very interested to see how it all pans out. It's basically one of those old adages that one of these has to give. At some point, one of them will have to give. I believe the dollar right now is soaring because of manipulation, and people are buying U.S. dollars because that's where the yield is. They're buying U.S. dollar-denominated assets because we have yield. A lot of the other foreign countries do not have yield, so they're going to the dollars for that. And then you can see gold, right? This is that flight to security. This is the dangerous one, right? If everything goes to hell in a handbasket, gold will do well. It's painting a picture that things aren't looking so rosy out there. More money seems to be pouring into gold, which I think is something that we've been talking about in this program for quite some time. You'll notice that it was just pretty much going sideways from 2013 to 18. Now all of a sudden we're breaking out and we're starting to trend again. So I don't know. I don't know what's broken here, guys. Does everybody agree? Do you think that something is broken? Because if the markets are soaring, commodities should probably be selling off and the dollar should be looking weak. Well, we have everything. It's an everything bubble. All asset classes are ripping to the upside. Patrick says, can we bring Don Dawson on the program? I would love to have him back on. He only comes on the show when he's here in studio, and he doesn't teach out here in Irvine too much, but I will make it a point to get him out here. He is pretty awesome. Love having him on the show. All right. What's time? Wow. We're already at the end of the show? Man. I'll ask this last one. This is from Peter. All right, so I got the dollar index for Tom. There you go. And then Peter says, I'm interested in learning more about futures trading. What products would you recommend? I really can't recommend anything other than I would say to start, it's probably best to start off with index futures. It's like, you want to start driving, go back to your first days when you learned how to drive. Would you rather drive the brand new Ferrari Enzo that somebody's letting you drive and drive it in a very crowded area? Or would you rather drive the Honda Civic beat up automatic in a Walmart parking lot where there's not a car for miles around? You want to start off with the ones that aren't going to damage you too much, right? Of course, with leverage, you can always get damaged. But you want to do it with the ones that have liquidity, that are going to be a little bit easier to get in and out of. Not necessarily that they have more predictable moves. That's not the right thing. But there are, I guess, broader patterns because of the liquidity. That would be something like the Dow, the S&P, or the NASDAQ futures. I'd probably say the Dow is probably where you want to start because it's a cheaper price point. Other than that, you start going into gold, you start going into crude oil. Russell 2000 even can be kind of crazy. You could go into commodities like soybeans or wheat or these precious metals. Those become a little bit more dangerous. There are factors out there that aren't the normal market influencers for those assets, and I would say that's an advanced asset class. I would start and get comfortable with something that something that's not as dangerous. So again, start with the major indexes. Once you understand how the futures markets work, how the dome works, how the offers, the bids work, liquidity and all that type of stuff, and you start to get your strategy applied, then maybe you can experiment with different ones, moving into platinum or palladium or oil or whatever the case may be. But don't jump into those ones to start. They're exciting. I think one of the things you have to do as a trader is find out what interests you, right? Some people love the commodity space. Don Dawson, who one of our viewers actually mentioned, Don Dawson is one of my personal favorite commodities traders, and that's his passion. This guy loves it. He lives it. I mean, He's reading commitment of traders reports and farm reports because that's just his thing. I don't take it that seriously. I couldn't tell you what the orange crop report was or how the corn's doing or what the storms are in the Midwest that could impact soybeans and wheat. I don't know. I'd rather be out watching the 49ers lose the Super Bowl. So that type of stuff, it gets up to you. It really depends on what you want to pay attention to. I know we've got Brendan, one of our regulars out here. He loves it. He loves metals. He loves precious metals, right? Gold, platinum, palladium, let's say uranium for you, Brendan. That was for you. But there's a passion there. And to me, if you have a passion for something and you want to immerse yourself in it, then that'd be a great area for you to go into in futures. But start off making sure you understand how futures work as a whole, and then you can focus, whittle your way down into something a little bit more complicated, like some of these thinly traded instruments or more volatile ones that we talked about. All right. Let's see. I guess that will do it for today. Let's see. I've got everybody out there. Hey, Ruben, how you doing? Welcome back. All right. Cool. What's your okay? I got almost everybody's listener question answered today, and I got Gaire's. I'm doing good. Show's all by myself. I love it. I'm a gold and silver bug. I am as well. My Pan American Silver has been performing very nicely recently, I may say. And yeah, we got. And again, this is for Peter, but you have people like Ruben. He's saying he loves credit spreads. Look, everybody has some area that they've gravitated towards, which is kind of interesting because credit spreads are something that just. They're not for me. I like directional options, which are more simple. Maybe that's me. I'm just a simpleton. But there's other people who like very complex strategies. It really is a matter of personal preference. Again, start off slow, work your way into it. If you'd like to know more, Peter or anybody else who would be watching right now and may not know who Online Trading Academy is, we are the largest educator out there. We're teaching stocks, options, futures, Forex. If you'd like to know more about how these markets work, supply and demand methodology, putting rules in place around your trading so that you don't get burned, because the most important thing in trading is not losing money. It's not about making it. It's about not losing it. We have classes all around the world. We have 48 physical brick and mortar schools to help you understand how these markets truly work. If you'd like to know more information, you can click that link at powertradingradio.com. It says free class. Simply click on that one, type in your zip code, tell you which of our 48 campuses around the world are nearest you. All right, TJ is going to go, and I think he's going to show me what's happening for Friday. The good news is I have a guest on Friday that always shows up, so that's nice, either on the phone or at home. Here's what's cooking for Friday, February 21st. It's pretty much a manufacturing and services day out there. Today, by the way, Philly Fed manufacturing numbers, I should have mentioned this earlier, came out great. It was 17, they expected 10, came out at 36. Remember, below zero means contraction, so this is really good for the U.S. markets, which may be part of the reason we saw this catalyst out there today. For the U.S., the Euro, and the British pound, it's flash services and manufacturing PMI tomorrow. So the trifecta there for the major global economies. Canada has core retail sales. Canada actually had some not the greatest news out there. The ADP non-farm employment change for Canada came out a little bit uglier than expected, but all in all, things looking okay out there for Canada. So that's what's happening for tomorrow. You look at the earnings calendar. Fridays is normally pretty light, but we do have Royal Bank of Canada, Deere & Company, Any Spa, Royal Bank of Scotland, and Magna International will be reporting earnings tomorrow. Who knows? Maybe those will be one of the major gainers like we saw today. You never know. Stuff could be crazy. All right, our guest for the show for tomorrow will be the Ambassador of Opportunity, John O'Donnell. He will be, I don't know what we're going to talk about. Again, today was a shock to me. We just kind of went as we saw the listener questions come in, so we appreciate that. Again, if you guys have questions, you want something to discuss for John and I for tomorrow, you can go to powertradingradio.com, click that Power Blast button to send on questions, or just click the free class button at powertradingradio.com to find out more information on how Online Trading Academy can help you understand how these markets truly work. Until then, happy trading, everybody. If you like the show, click the thumbs up out there. Leave us a nice little comment. And until then, happy trading. We'll see you tomorrow.
You're listening to Power Trading Radio live. Watch the show live or on the archive at powertradingradio.com and YouTube. Or download the podcast from iTunes or wherever fine podcasts are downloaded.